You know what it is. Everyone come on down and get them Hollywood trades. All right. On this one, we're going to talk about, this is going to be Propulsion Blocks Part 2. Buckle up and get ready for ignition. What that boy say is the remix to ignition. Hot and fresh out the kitchen. Mama rolling. You know what I'm talking about? You know. And on this one, we're truly going to do a different chart here. All the people in the server, Forex guys, you don't know anything about these stocks, do you? Let's pick a random one. Let's do Apple. I haven't looked at the Apple chart in months. Of course, this chart looks different because it has market open and market close. All right. I think these are really good for propulsion blocks because in the morning at 9:30, matter of fact, let's do a 3-minute chart. At 9:30 is when you get most of your ignition on stocks. As we can see, we are in a tight range here. But good thing about propulsion blocks is that you can still use this range and still get good results. Options traders really can use this teaching or this line of study, I'll say, because a lot of them don't really. They use like volume profiles and this and that and RSI and stochastic, whatever. But if you understand exactly how these blocks are stacking, right, and how propulsion looks, you can come into a session like this, right? You only have so long in a session, right? Us forex traders are spoiled by London session. It makes it seem like we have more time in the day than we do, but this is all the bars you get, ladies, during the day. So let's take an examination at what propulsion would be. This should be a quick little 10-minute just to give you a key into the market secrets series here. We're gonna be doing propulsion and basically secret market combos here that should be well known, but stuff like the Reaper, stuff like Modus, that's a very eclectic one. What to do in certain little key instances. I'll even use a volume profile. I'll do one on volume profile, but this one here on propulsion blocks. So let's start marking off this PD, right? So propulsion blocks they're like institutional order flow blocks, but a little more based. Institutional order flow comes off of the top. It is more of a bull flag motion, like this right here, like this flag pole here, and then you had a bull flag right here, right at open, or a bullish pennant, whatever you want to call it, retail pattern. That's just basically the liquidity saying that it just doesn't want to go down here anymore. So propulsion is one that comes 50% down, and this basically almost made that 50% retrace. And for sake of detail, all right, we'll use this perpetual situation of the 50%, right? So propulsion is something that comes 50% down the PD, close to it, and then takes off. So this right here is a propulsion block, and that's what we'll use. And these are very good for entry. I said in my first propulsion block video that I would cover entry using propulsion blocks, and here we are. This is how you enter using a propulsion block. After the block comes down, right, make a stretch, come down 50%, boom, that is your new trapping zone. You want to see respect of this zone when you get an engulfing bar or a displacement bar printing out of this zone. you know you are good to go. Your propulsion, you will just say that your propulsion has ignited and you are propelling. Once again, you have another one here. Boom. This is this is more of an institutional order flow block right here. Again, because it didn't come 50%, right? So if this is the bottom of your zone and this is the top of your zone, it actually did. It came really close to the 50% of this rise up. And this is manipulated algorithmic, right? Distribution. So this is what I like to call harmonic distribution, when they use these peaks right here to manipulate the 50%, right? So you can get closer to that discount range as price is igniting, right? And let's get another one. Boom. So we make another stretch. This one comes down 50% as well. And so you have another propulsion block. And when price starts doing these are your individualized support zones, right? Boom. So let's go from there to here, right? And close to it, right? So there's a little margin of space there, but basically that's the whole premise, is that it makes a stretch, comes down most of the stretch, and then begins to take off again. You have another one. I might as well just use the ones that I'm already making, right? But again, you have, let's just say you have another stretch right here, right? From there to there. Boom. Now you have another propulsionary zone. And as you start getting more up these propulsion blocks, the more liquidity there is, the more space there's going to be in between, these bearish blocks, right? These liquidity absorption. So you do what? You go external, right? And then external, and then this bar grabs internal. It rebalances some of that internal, takes off here. Boom. What's this bar do? Rebalance. You get more external. What you do here, rebalance internal. So a propulsion block is that rebalancing of internal. And a lot of options traders don't understand these type of zones. And I really want to get this out to options traders. That's why I used a stock to start doing this video. Because in the morning when price ignites, what I would call ignition, right? It sweeps right here. You get the sweep of a low, and I covered this in the last video. This is the ignition. This is your only low that you have to use as bait. So this would be a bullish dip point, bullish stop hunt on the bulls, just slightly, just a tad bit. You sweep a low, you get internal, boom, you hit your wick or your wall, wherever, right? There's a little bit of a wall on the backside of this here. So these are all your bullish liquidity zones here. Bullish supply zones develop in what? A bearish block. And bearish blocks get traded back through to the top. The price then can come down and sit onto that array of bearish candles. The algorithm references these candles. If you guys don't know about that, you need to go to the order block masterclass video and the premium discount video and go ahead and study that first. This is more of some of the back end secrets of how to really just capitalize on that bearish dip into a bullish. If you're long, you want to see that bearish dip. You love these bearish dips because this right here gives you what they call dealing range, or CRT as Romeo would call it, and you dip right beyond your array, right? The quicker it happens, the better. When you see this, if you see this happen really quick, this is great because it doesn't matter how fast this is moving. This isn't momentum. This is momentum. This is momentum, right? And this is displacement. So you have momentum and displacement here. So the faster this comes here, the faster you get to see what happens here. And what happens here, it comes right back up, dips it, boom, and gives you a bearish block and inverts that last little bearish block. So now you have a supply zone. You have a little micro supply zone inside that little block right there. And that's more so, I would call that, I have a compression block marked off for those, but those act as support as well. Sometimes traders would prefer to see even a sweep of maybe back into this zone, but this right here, this little liquidity, little balanced price thing right here that it did to balance itself was enough to where it didn't have to come back in. It's using all this now. It's using this, right? Who knows about bearish long bodies being inverted, right? What do we call that? We call that either a flip zone, right? What does it do? It comes right back to where the body's at and dips into it and does what? Propulsion, right? So these are some little tricks you can use, and this is a quick teaching. Propulsion is just that, because when you start getting up here, now you have more of an actual order block, an order block that was associated with more candles being swept, a block that was more associated with lows, let's just say fractal lows being approached or swept. And so you have your bullish dip here, and then you get what? An order block coming off of that. Again, once you get these dips like this, you don't even expect these order blocks to come back and get revisited. So that's the thing about when you get the right ignition point with a propulsion, right, sweeping. And this was also more of an order block itself because it swept, but its arrangement inside the PD is what made it propulsion. Of course, this may have been propulsion on a bigger time frame, but this was a stretch, and it actually undid that stretch, right? Boom, it stretched into buy side, and then it undid this whole stretch. So down, up, down, it swept this down candle, and that gave it the fuel, right? You got a down candle, you go up, sweep that down candle, that gave this the fuel to come up again, and that's what we see as that. And then you start getting a slight bit of the opposite going on here, right? You sweep a high right here, fail to displace, and you start getting propulsion, slight propulsion in the opposite direction started happening right here. Is not too much of a harmonic distribution, because you don't get propulsion after propulsion after propulsion. That's what I would call harmonic distribution. Is harmonic accumulation here is what I would call that. It's accumulating value. It's accumulating buyers, right? It's accumulating here. Is more of a distribution. It's distributing shares here, back out to selling shares off right here. So that's a little example from that morning. And let's go to the next one. Let's say you wake up, right? Let's just say you wake up and you see this is what's happening in Apple. Unfortunately, it started developing very much bearish distribution here. And all of this is balanced. It's balancing itself. It's balancing itself. Here is where it starts getting into the bearish pennant. These are very common at open, bullish and bearish flags, bullish and bearish pennants. It made that bearish retail pennant, what the algo guys would call a fair value, a gizzy right here. Boom. And yeah, so you would use this. This is a cheat code. Once you see something like this before open, boom, you see that distribution happen right there. And now, right, and this was already propulsionary, right? So this was, you can even call this was 50% from here to there, just for clarity's sake. 50% from there to there, and this also existed at the 50%. So boom, a little bit past 50%, but let's just say this is a propulsionary zone as well as an FVG. So you have propulsion block again right here. Boom. So this is your selling zone right before open. Boom, you come to that zone, you reject that zone. As soon as you get this sweep and rejection here. You swept a little bit of stuff here. You didn't quite sweep this, but you don't need to, because this acts as the liquidity exchange right here. That bar is a liquidity exchange point for this whole area, right? This is the manifestation of liquidity. You can see it here, but this right here is the manifestation of liquidity, and you use that liquidity. So you sweep some highs, you got some bearish pivots right there, you swept them, and then you start rejecting. That's when you know you are good to continue down. And this actually, if you measure this actually went into a propulsion ignition of this price action here, right? Boom. This actually went into propulsion ignition. We are going to go to equilibrium and see, right? This is the equilibrium of this range right here in this middle, right? And so it balanced itself at the equilibrium right in the premium range. So now premium, discount, equilibrium. So now right in the premium range is where you would expect those new bearish blocks, right? And so you get a high, a low, sweep the high. Once you get that sweep, once you get a high, a low, and a sweep, you know you're cooking now. That's when you know you're cooking. If you watch the liquidity inducement masterclass, you will see that is what that means when you get that. You want to see it sweep that high, right? You want to get that inducement high, get a low, and sweep that high. That's when you know you're about cooking. You got you a new order block. You got a whole liquidity issue right here. So all of this is a bearish order block, right? And if you use the top block here, now you will actually have a true order block to play off of, right? You will have a true bearish order block here. So minus all your PD and minus everything like that. Now you have a high to sweep. You have interaction with your bearish block that started the session. And as you see, you never come back to that block. The rest of the session is bearish. Pre-market was bearish. It's just an overall bearish array right here. And then, let's just say you missed all of this. Let's just say for whatever reason, you missed all of this right here. Boom, you get a bearish inversion, a new bearish block right here. Boom, let's just say you begin to now trap this block. So you missed all of this, and now you got a more stable block. It never comes back to your sweet point. Sorry about that. Your sweet point, and you just get bearish inversion right here. And so you just start getting all that bearish activity coming off of these blocks, these pivot zones. And so that's what you would expect. Again, now you start going into the propulsionary. This is when you start going into the compressions and the propulsion blocks here, right? Coming down, boom. This was more like institutional order flow. But then what? You get what? 50%, another propulsion zone here. Boom, you are back at it, right? Just to be accurate. Boom. Boom. That's your 50% mean threshold. It approaches it. It absorbs some highs, some lower time frame highs, comes into the internal rebalance and hits a wall. Your wall would be this at this point, right? All of this coming up because people want to get out of there. So this is a liquidity wall, right? And people who don't know, you can actually take this and actually come over and paint that off as a mitigation block. And so you'll see sometimes I'll put mitigation blocks on my chart, but I'm really just looking for that sweep of these highs into an internal and then a rejection point, basically, right? So, right, probably be using, I don't even know at this point, probably using this right here as a rejection point. If we zoom in, and that's all we're looking for. It's cool to have all the rest of these artifacts on the chart, but if you got something simple like this. Bearish rejection point. You're using this high. This was a down close candle, got traded through, and then this candle got traded through, created a new block. It will not be expected to be revisited, because if you sweep a high into internal liquidity, you create a block out of that. That is a propulsion block. Propulsion blocks do not. It's going to be gone once you get that sweep into liquidity like this. Absorb all of those orders that were untriggered. Boom, you get saturated and you keep going. And so that's the idea of propulsion. That is how you use it for entry. Again, right here, very good example of propulsion. If you were to see this start to be rejected, right, you had a low, you swept that low into liquidity. So this low acted as your external, right? Boom, that satisfied your sweep. This satisfied your internal. And I don't know exactly what wall it hit besides this wall of insane liquidity right here. So once you get that rejection though and back up above this low right here, and you start getting this, you are good to go on your propulsion block. And so as you can see, this wick came right to the top of the body right here, and it just began to respect it. You can also use that as a re-entry if you miss the initial entry, which is here somewhere. You can get in right there off that rejection, and as the story goes, boom, right, you get up to this liquidity zone and it just fails, right? So there's another video I'm gonna do for rejection blocks. Got moths trying to attack me. Another video I'm gonna do for rejection blocks, and that's what this is right here. This is a rejection block. Wrong one. Rejection block. So this is a rejection block, and what you get here is a body sweep. It did not sweep the high, but inside of a wick, there's a thing called a body purge, where the bodies can purge beyond the previous bodies, right? And that satisfies the liquidity sweep. And so we'll cover that as well. That's in the next Market Secrets expose. For right now, that is an adios amigos. As you know, we are on the road to El Dorado. We love some gold around here, but we love all the charts too, because they all work the same, as you can see. All right, and so with that being said, we are out. Go ahead, comment, like, subscribe. Let me know what you want to look at next. We getting ready for the market next week.